just got three things to say. God bless our troops, God bless America, and gentlemen!
Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Good morning, good morning, good morning, good morning, good morning, good afternoon, good evening. No clue what time you're watching it. Don't really care as long as you are watching it and spending some time on it, because this is your week number 4. Well, actually, your week number 3 of 2026. We are heading into post-OPEX, a little bit of a slow week as far as the schedule goes for companies that are going to be reporting earnings, but oh man, the fucking gloves came off over the weekend, right after the market closed there on Friday. Trump said he's going after JP Morgan for debanking him after the January 6th non-surrection insurrection, which took place after he lost to Joe Biden. Well, that wasn't all. He went off all over the place, talking about how Wall Street Journal's got their fake news, and actually I went through his old Twitter archive to go back on how, yep, glad to see this back on May 16, 2012, glad to see that Jamie Dimon passed yesterday's shareholder vote. The JP Morgan stockholders understood that a good CEO is worth keeping. And then you get into just last summer, July 2023. I don't know who said it or where it came from, perhaps the radical left, but I never discussed or thought of Jamie Dimon or Larry Fink for Secretary of the Treasury. Then, prior to that, prior actually to the elections, highly overrated globalist Jamie Dimon, the CEO of JP Morgan, is quietly pushing another non-MAGA person, Nikki Haley. Well, we all know how all of this has fallen out, but that is not what it is. What it is, and I don't know where I have it, because I'm dealing with the same thing you're dealing with, the USA that we grew up in and the USA that you live in now. But your tariffs are coming on, and that's the reason why, not there but here, this is not 100% accurate, but it is semi-accurate, because futures are going to be opening up here in about 20 minutes. The Dow futures are down almost minus 1%. So what does it mean? Well, simply means, like I was trying to share there over on Friday, you're fucked. Not that you're fucked, but you're fucked. The Treasury, the Fed, they are going to inject more money this week in QE by buying bonds than they've ever done in history. More than COVID. 3 reasons why. China is not buying your shit anymore. China's actually liquidated 50% of their holdings over the last 7 years. India liquidated 35% of their holdings just last year. Nobody's buying your shit. And here you go with your 10-year up at 4.234, and you are going to be going a lot higher on your 10-year, which is not good for your bulls. So let me go back in here and bring you back. Hey guys, I do apologize. That thing came over here. It kissed the coast. Saturday, like I shared for you over there in the chat. Where is it? Where is it? Where is it? Here we are. This was my Saturday morning, your Friday evening. Those bamboos poles were, and these are, so you understand, these are 3-4 stories tall, these ones. They're not all the way up, but they're 3-4 stories tall. They're bending, taking on that weight of that water. But yeah, we got some light flooding in the area, not in my area, but yeah, we accumulated water. Power was out. I had the generator on, so I had cell data. It was come and go. Winds were still going 20, 25 kilometers an hour. As you can see, I shared there for you my Apple. 1 bar is all I had. and it was freezing cold. I mean, freezing cold, 73 degrees Fahrenheit. So for those one-on-one calls, where are we? Yeah, the one-on-one calls that I did miss there on the 17th. Tomorrow being the 19th, being that it is a holiday, I already have people scheduled for the 19th, but I will try and get all of you that were set up for the 17th in on the 19th because, you know, what choice do I have? So where are we going here with this? Let's go to the SPX. In the SPX, you got a doji candle. Doji candle. You closed down 4 points. 4 points for the week. So you didn't go anywhere during the course of the week. But you're starting to balance everything out here. You got 7 green closes, 4 red closes, 162 point range on the month. Oh my God, it's incredible. But we're still green. We're still green as of Friday. As of Friday, we're still green. Up just less than 1% on the month. The month that began at 68.78.11, but we did put in a green or a red week, so got to take that into consideration. When it comes over to the spreads, I mean, I don't know. It's up to you. Is this really the premier platform for professionals turning passion into profits?
His testicle sack is now so large, he has to wear a huge hoodie upside down instead of trousers.
You tell me. Had a major fuck up on that we're going to attack Iran, just absolute ramp up overnight that took place there on Monday, January 12th, where the options we rolled out from prior, they were working great until like the sun rose on Monday morning and they were done, toast, ended, finished. And we wound up putting in the new all-time highs right there on that Monday, 69.86.33. And then we closed below 69.80. So once again, starting to be a little bit more conservative, but as well taking care of the charts that we have. And I mean, Wednesday, Thursday, Friday, you got your minus 18 on the 18th day. On the 18th, when the SPX was off the Epstein list, ability to be able to put on the Epstein list, turned 18, you got your minus 1% day. You still have not gotten a plus 1% day. We played the plus 1% bounce off the lows over there on Thursday, but we have not gotten that official plus 1% day. So if you're thinking that you're, you know, like I said in all of our emails, and we'll go back over here where we started the month out, or the week, going into last week, 16 all over, boom, boom. IWM puts totally failed. Never ever worked. The QQQ puts, that's a different story as you close down there, visiting quite a few times down below 620. But yeah, Monday Iran, Tuesday Cuba, Wednesday Mexico, Thursday Gibraltar, Friday Gulf. I did not have EU tariffs with Greenland on my bingo card to be happening there on Friday. Apologize for that, but I didn't have it there. But like I say, we're supposed to believe 70.50, 71.02. That's what we're supposed to believe. And I've been sarcastically skeptical, trying to, you know, paint the bigger, broader, wider picture for everybody. But that's what you're supposed to believe. You're supposed to believe based on a textbook, like, you know, when you're going to learn how to drive, how you read books about driving. Okay, and you stay in this lane, and when you reach to this point, you engage your turn signal. That's what this is right here. We're supposed to believe 70.50, 71.02. Well, I want to congratulate all of you that are enjoying the new moon, which is taking place tonight. I wasn't able to see it because it was still cloudy from all of that fucking stupid typhoon shit, which I need to get upstairs after the market or the futures open and go place stakes in all of my chili peppers because the wind blew them all over. On the QQQ, red week, minus 1 point. Ooh, minus a point. Oh my God, minus a point. But it's fractionally starting to press on that 620, 620.06 where you began the month, 620.06. You're starting to press on it, and you don't have anything to worry about when it comes to that plus 1% day because it's been putting in plus 1% days consistently during the course of the month. you had the same thing. You got 18 trading sessions, and on Wednesday, you got your minus 1% day, your little drip down there below 620. Boom, boom, here we go. Ah, ha, ha, we made money. Let's go on. Over on the IWM, it ain't the same shit. 21 trading sessions without a minus 1% day. 21 trading sessions. And that's 263.10 for Monday, but unfortunately, that's going to be happening before the market even opens. The way the futures are going, and we'll get back onto the futures in a little bit, but I'll stay on here for you for a second. Not really. No, let's go ahead. Let's get onto the charts. So, the 10-year, like I shared with you, saw that 414 over there on Wednesday. I'm, constantly watching it. It is on this screen, just so you all know. This is the screen that I have the 10-year on, which, let's graphics go. Okay. I got my Nikkei, my Dow Jones, SPX, NDX, Russell 2000, Bitcoin 4-hour charts. Why am I have a 4-hour chart? I'm looking at the RSI specifically just to know where our relative strength is on those. In my middle section, I've got my crude oil, my 10-year, silver, the dollar, Japanese yen, gold, and then I have volume trading over on the ES. Over here on the SPX, 1 hour, the NDX 1 hour, and then looking at the semi-wider trades that are out there that we've already discussed and have already emailed out. And then my tick Q and my tick, which are 1 minutes, because I'm obviously looking at a 1-minute chart. But again, on the SPX and NDX down here on the left, the 1 hour is because I want to know how weak we are, how strong we are. And that's the reason why when I go back and pull back up the screen, give me a second here. This is the reason why I can fucking crush it.
Boom!
When I'm doing my credit spreads, going right there to the edge of where that risk is, because I can see everything, and all of you could be seeing the same exact thing. All you need to do is invest yourself with some bigger monitors. I use the 55-inch TVs. I've got 3 of them. You can get away with 2 of them because you don't need to watch all the single stocks that I watch on my 1 monitor. It's up to you. Completely up to you what you want to do with your future, because let me tell you, your future ain't looking too fucking good if you plan on, well, we're going to go ahead and move on through the course of the year, and, I got this new job, and I won't be able to trade during market hours because, I'm taking on a new position, I'm taking on a new internship, and I'm going to focus directly on that. Well, guess what, buddy? You are FUBAR, because you're going to be the first one to get let go. Here is your year-to-date SPX. And we're looking at a very small chart, a 5-minute chart, just so you can see, boom, that was the easy part, that we were bottomed and we were going to bounce. You had your 50-day moving average, very, very easy. And then since then, going in for the last 2 weeks, all you have been doing is snaking 69.35, failing at 69.65, and trapping anybody that was getting short below 69.20. It's not been, a roller coaster full of deaf people. It's actually been pretty fucking easy. And you move on to, again, you are supposed to believe, because it's written in the textbook that you are going up to 70.50. And after you've reached at least 70.50 on the SPX, you will get a tiny little dip, which will take you down to around 69.65. After you have gotten that little dip to 69.65, you will then go up to no less than 7,100, 7,120. Then you will be allowed, you will be given a hall pass from your fat fucking science teacher so that you can go and take a piss. Take a piss meaning you will get a little bit of a dip. Well, it's completely up to you if you want to go through with that, because what I'm showing you here is going on to the SPX on the full moon chart, like I shared, looking to see that that was looking pretty good when we were going up there earlier, but because we got that higher high, nope, going up higher. Full moon, we placed a bottom over there. Nothing to look into from a technical point of view. It's simply looking at it from a visual understanding to kind of get yourself a little bit of a hint. But here's your RSI on your 4 hour, and as you can see, as we have been constantly moving upward during the course of these past 3 months, upward by 2 points, 3 points, 10 points each week, fractionally moving up, your RSI has continually been moving to the downside. And what we're watching out for is to see when it gets oversold, because when it gets oversold, it doesn't matter if Donald Trump's giving Jamie Dimon a fucking blowjob. You're going to get a bounce. It doesn't matter. It's simply computers. Nothing else matters but where the computers are and how it works. Well, we hit 69, 58, 49 quite a few times and failed, didn't we? Your 68, 59, 49, that's your 161.8 retracement of your drop-off from the 5-year anniversary of COVID, which took place last year, down to your April 7th drop, where you had your minus 21.35% decline, where during the course of that minus 21.35%, we were minus 20% for 13 fucking 1-minute candles. 13. I could be wrong. It might be 15. It could even be 17, but it ain't 20. 1-minute candles, where a portion of that 1-minute candle was greater than minus 20% from where our highs were over here. Well, the Donald Trump stock market is up 19.12%. That meaning Donald Trump, from when he beat Kamala Harris at 58.64.89. And I'm sorry, ladies and gentlemen, but you're going back there. Whether you like it or you don't like it, you're going back there. And I'll show you why in a little bit, but you're not going to go back there in a straight line. Looking here at the SPX and looking at the RSI on the daily, once again, having peaked over here in September where we were around 6,700. We've been grinding to the upside while this has been declining to the downside from a strength point of view. Two things you can get from this. One, you're a fucking idiot if you're going to be bullish.
Confirmed.
Two, because this has been weakening and weakening and weakening as we have been grinding and grinding and grinding, it takes very, very little to get this to be oversold. And once you get oversold, like you see over here on November 20th, we got oversold, boom, you get your bounce. It's trading. It's just the way that it is. Here's a perfect example. Right over here, we were overbought, and this was on July 25. July 25, I'll bring you into the chart. Geez, whatever. Right over here on July 25, we were overbought on the daily. On the daily, we grinded a little bit higher as we went into that end of the month, as you remember, and then, boom, July 31, August 1, that minus 1.5% drop, and we got oversold. So it doesn't take much to get you oversold. But because of where we are, it ain't going to be too much if it happens quickly that it will bring us down to oversold. And next week is the big week. So what you're going to see, whether you like it or not, is you're going to see the bigger, broader, wider view where I'll remove this and remove this. And this is what everybody is trying to show everybody out there on social media, is this. That rising wedge pattern, failure, looking pivot, looking for an immediate slowdown, da-da-da. Well, I'll put those back and put that one back as well and zoom you out a little bit further so you can see, first and foremost, what you're really looking at. That's what you're really looking at right there, is that. So buckle up, Buttercup, because the bigger, broader, wider view of this, as we go into the shorter period of time, short period, and what I'm talking about short, meaning out into March 20th, OPEX, big OPEX, minus 10% minimum is what I'm expecting, and what I have been expecting for quite some time. And the reason why, like I bring you back over here, I have the March 20th, 2026 Apple 250 puts, $4. Well, I would behoove anyone, like I've already shared before, having gotten already 100%, even though they are for March, going out to March, let's be a little bit real, as you can see from the very non-biased and very intelligent social media managers over at Bar Chart. Apple has now traded red for 7 consecutive weeks, its longest losing streak in more than 3 years. Now, you don't need to be a rocket scientist or technical genius to be able to understand that after having gone red for 7 weeks, there's a high probability that you are getting oversold from a technical point of view as you go into earnings, which are next week. I also have the March 20th Palantir 160 puts. I got them in at $12. I got in a little early. They made a little bit of money, but I'm looking at it from a bigger, broader, wider picture of things, and that's the reason I had those. You have the March 20th IWM 250 puts. I got into early at 753. I have the March 20th QQQ 600 puts at 1242 that I got in early. And I got in as well to the March 20th SPY 670 puts at 1157. So again, from a bigger, broader, wider view of things, I'm looking for this to be coming down to the February 19th highs from 2025. Right there around 6120, 6120, 6150. Minus 10% is 6986, minus 700, call it. So a minus 700 point move, you're looking at around 6300. So I'm sitting pretty with what I'm looking for, but I need a catalyst. I need a genius to go and engineer the reason why the drop takes place. And you got that with, we're going to take Greenland. So, again, sticking here with you are supposed to believe that you are going up to 70, 50, 70, 100. You're supposed to believe that. I bring you here to the 2022 bottom. Okay? Now, a couple of people will understand exactly what we're looking at. A couple of people will sit there and go, what the fuck is this? Well, I'll stick with the first half of the group, and the second half can kind of follow along and then go and do their own research. Your big drop off over there, 2022, sold off for 10 months. Your one, your two being where Israel invaded Gaza, your one peaking over here right after this portion over here in April, May, when NVIDIA invented AI. You never ever heard about AI until right there around November of 2023, or sorry, April, May 2023, that was when you heard the word AI, and since then, everybody's been AIing everything they can do. July 27th, we peaked, 3 red months in a row, down to Israel invades Gaza, which is the same bottom as Russia invading Ukraine. And where do we go? Ba-bang, ba-boom, ba-bam, ba-boom, ba-boom, and you've got a perfect 3, having reached almost to the 200 extension, just below the 161, but coming right in for that perfect 6119. 6119, that perfect minimum requirement for that 3. Boop, right there, February 19th. Your 21.35% sell-off down there onto April 7th, and from April 7th, your wedge, which I've already shared with you, which you have now reached up to the 123.6. The 138.2 is sitting above you, and you have your big 300 extension at 69.42 without keeping into context where you are from your retracement point of view. Now, your channel here looks pretty damn good, doesn't it? And here we are after bottoming on it on April 4th, April 1, your channel having been overextended. Well, this is also your new moons. And your new moons, just like your full moon, are as accurate as you can get. Bang, 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 bang. And your new moon, like I shared with you already, I believe, but I will bring you back so you can see it. Your new moon is taking place right here on January the 19th, with today, Sunday, being January the 19th. And I have run a little bit over on my timing. So with the futures about to open, let's get this thing up here and running so that we can get the big bang right up in front of our face, and we'll get tick strike going as well. Let me go. Where are you? Where are you? I don't have it up and running yet. Give me a second. Tick strike. Come on. We want to hear this. Futures, where are you? You're opening in 30 seconds, 45 seconds, whatever. But anyway, on the futures, what you're looking at there is at the moment, and there we go.
Oh wow, it's so close.
That hyena's bold.
What's it doing? Is it? Oh my God!
Got him!
That just
It's
blasted
covered!
it.
He's running.
I didn't see that coming. Nature, man.
Look at those gaps. Look at those gaps. The S&P is down 0.75%. The NASDAQ is down minus 1%. The Dow futures down 0.60%. And there it is. The big chunk of shit that's sticking on the side of the toilet has been pissed off. Russell 2000 just hit minus 1%. Doesn't need to stay there, but at least, you know, you can put an asterisk like Barry Bonds' home runs that it happened. It did happen. So now as the NASDAQ has come down here to the 50-day moving average, buy the dip for the futures, and I'll get over into the chat room real quick before we go on. Let me go here. NQ 50-day. So, moving on. There's your futures. Futures are there. So let's get back on to where we were and go back onto the IWM. IWM plus 55.5% from the lows on April. Plus 55.5, and trying to track this final wave after it bottomed over here in the beginning of the year, over there at 245.86, with the January candle being 245.57. Nine green months in a row, 20 days without a minus 1% day. Very clean appearing 1, 2, 3, 4, 5. Very clean appearance of a 1, 2, 3, 4, 5. Where's the 200? 200 right there. 266.90. Failure, failure, failure right off there, and starting to fractionally roll down. You've only got two gaps, so nothing big over there. But again, you know, the breakdown below 260, that would be your primary trade that you'd be looking at. And for those that are going out, looking further out, going out to March, it's cheap as shit. I mean, it's extremely cheap, but don't go out there and say, okay, well, I'm going to go buy the 245 puts for January. No, it's so fucking cheap. You buy the 260 puts for January. If you do get that breakdown below 245 on January, then you're fucking, you're chilling. Instead of stressing and worrying, is it going to come down to me? But on that note, I bring you back over here to this chart, this being my SPX, trying to show you the bigger, broader, wider view of everything with the bigger, broader, wider view of the wedge. Oh, wait a second. Let me start that over here. Here's your 5-year weekly, and as you can see there, but let's look at this from a much bigger and broader wide point of view. Man, it's as clean as you want to make it. So big, you're on here to your broader view of what we're looking at with this, and trying to zoom you out. And you're going to say, wow, that's too much detail, too many things to look at. You're not looking at all those things, okay? You're not looking at all those things. This is what you're looking at right here. This is what you're looking at. Let me put this down to 2200. Those are all your unfilled gaps. These are all your unfilled gaps. And whether you like it or not, whether she's sexy, she's gorgeous, she's uglier than pig and shit, he's got hair on his ass, or he's fucking six-pack abs, male fitness model, every gap gets filled. That's the way that it works. So don't get stuck in prison by trying to be long and say, you know, the market, it always goes up. All gaps get filled, and you already know where you're at. You are at, let's go back. You are here. You are here. You are here. So, again, this isn't a huge week when it comes to earnings, but it is going to be a huge week with the impact of the Fed pumping money into the liquidity of the market, because there is no liquidity in the market. And this week being Netflix, the main headliner for the week, reporting after the market closes on Tuesday. Any one of these names that you want, you tell me, I will provide you with all of the information you could ever ask for and my opinion on what is best. But I would not trade anything prior to them reporting. After they report, do everything you want. But like I shared with you in the past as well about your distribution zones that you're in, you're up in that distribution zone. You're up in that distribution zone up here, and what's coming after that? Look, man, it ain't gonna be nice, ain't gonna be pretty, but, you know, don't go fuck it up and say, oops, I did it again.
They're going to probably halt trading. We can't stop the selling. Even Kramer doesn't know what to think.